Welcome back, and we're joined by Jitendra Gohil, who is the investment officer listed equities at Bajaj Alternate Asset Management Limited. Jitendra, great having you. Let me first start off by getting your sense on where we are, where the Nifty is concerned. Of course, any earnings upside here could well be a positive, but how likely is it that we could actually beat consensus in terms of earnings, and therefore could the index surprise us on the upside is what I'm trying to get.
Yeah, hi. Thank you for inviting me on your show.
Very good.
First of all, in terms of markets, what we think, there are two parts to it. One is valuations and one is earnings. What we are a little bit cautious is on the valuation front. So earnings growth could be slightly less than expected in our view. We are a little bit more positive on the macroeconomic part, but in terms of earnings, we think margins are at all-time high for BSE 500 companies if I see. And competitive intensity, especially in the banking sector, especially on the consumption side, is going to increase going forward. So we are not very positive in terms of earnings surprise going forward. Having said that, it could be somewhere closer to low double-digit kind of a range. But net-net, what we feel is that whatever has happened to IT, it's completely eye-opener for the corporate India. If you see Indian corporates margins are at all-time high. Their debt to EBITDA is at around 1 times, which was earlier used to be 3 times. So balance sheet is in a very, very good shape. Margins are at all-time high. So we think that there could be more investment boom coming in the next few quarters or so. And that might lead to, margin compression in the near term. And ROE is also one of the best, probably after US, we have almost like 15% ROEs for BSE 500 companies. So all, ratios suggest that there could be investments coming in various sectors. Competitive intensity is going to go higher, and hence we are not very positive in terms of earnings surprise on the upside. It could be somewhere closer to low double-digit level.
Interesting, Jitendra, because you're calling for caution at a time where markets have underperformed, where patience is weak, but it's also a rotational market, right? You're looking at metals all-time highs. You're looking at energy all-time highs. So in that rotational market, what is it that's likely going to move over the next 6 months, which is currently being underappreciated and could well be the big mover?
Yes, I think there are a few things, while a lot of people are actually very positive that, look, India has underperformed. Now it's the time that India will bounce back. But if you look at last 5 years, even Europe has outperformed India in USD terms. Even Japan, Korea, which were completely underperformer market, have, started coming closer to, India's return over the past 5 years or 10 years period as well. So India, if you see, today, market is more focused on technology disruptions, and that is actually threatening, investors. That look, India does not have that right to win kind of company which can dominate globally, and hence I think India is, sidelined in that sense. And there's no reason why, FII should come back heavily into India till the time that AI rally is over globally, and probably India can get some kind of flow saying that India is a defensive market. And India is largely a service-driven economy and less of manufacturing. So disruption because of AI, is kind of going to threaten some of the FPI investors to just look at India investment. But coming to pockets of opportunity, I think what we have done so far is we have started, meeting companies and understanding where there is, bottom-up good stock picking ability, right? So we think that PSU are still in a sweet spot. We think that there the valuation is a little bit reasonable. And if you see how these PSUs are actually investing in different businesses, which is commendable. Like 10 years, if you see, PSU banks have actually outperformed private sector banks, and still PSU valuation is cheap. And not just the banking sector, but if you look at the overall profit pool is now around 5.5 lakh crore. 5 years ago, that was only 1 lakh crore. So PSUs is in a very, very sweet spot.
Okay.
Other could be thematic ideas with respect to data centers, where we think power sector is looking pretty attractive at this point of time.
Right. Jitendra, we'll take a pause on this conversation. We'll continue it after this very short commercial break, which I have to take. So let's do that. Let's come back, continue.
Right here in ET now, and just looking at the closing trades right now, well, the index, of course, is lying flat, and there is that seesaw of a situation. It's good to see that there is that shift in some of the movers. Look at a BEL, for instance. That's made a dash, and it's one of the top movers today on the index. It's holding up 2%. Max Healthcare as well is looking quite strong, 2% of an uptick there. Tata Motors PV has made a dash after quite some time, 2% higher there as well. And iShares as well is holding good by about almost 1.7%. SBI seems to have come back into the fray, a 1% uptick coming in there as well. And that bit of a churn playing out within the pharma pack as well. So today it's DRL along with Cipla, which is actually showing you leadership. Other than that, there's Bharti, Reliance, ICICI Bank, the laggards from yesterday, which also have made a bit of a comeback. What's still languishing, though, is Eternal, Trent, HDFC Bank, Axis, Kotak, M&M. They are the ones, and of course, Asian Paints as well, which continue to languish a little bit in trade. But we're still in conversation with Jitendra Gohil. Jitendra, you were making an interesting point about PSUs taking the leap from here onwards. But what about PSU banks? Because that's the other debate in the market, right? Whether to go with the big private banking stalwarts or to increase exposure within PSBs.
I think we are clear that, look, the valuation-wise, PSUs are still cheap. The return ratios, the NPA numbers, credit costs, is significantly better in some cases, and we are seeing that even in private sector banks there are some frauds coming out. So it's not that PSU, which used to be really boring, no growth, but I think they are taking right steps. Still there's a lot to be done, reforms to be done, but I think we believe that the growth rate in PSU banks is faster. So the credit growth is somewhere around 14-15%, versus private sector banks are growing at 11-12%. In terms of credit to deposit ratio, also some of the PSU sector banks are somewhere closer to 70-80, while the private sector is above north of 90. So I think from growth levers perspective, PSU banks have sufficient headroom. Valuation is cheap, return ratios are better in case, and that's why I think they are still in a sweet spot. And in terms of profits also, as I mentioned earlier, around 5.5 lakh crore of total profit pool of PSUs. Out of that, 40% is PSU. It used to be somewhere around 20% few years ago. The PSUs are leading the pack. Within that, PSU banks are in a sweet spot. So,
Jitendra, what's that part of the market that makes you uncomfortable at this point? Something that you wouldn't want to touch and that you're worried about?
I think consumption is still weak, and it is going to remain weak. We are looking at net saving rates is somewhere around of individuals is around 40-year low. So the job growth in the lower end of Indians' household is lacking, and I think there we see that still there is some more pain. People are talking about some kind of revival in microfinance businesses, but I still think that it will take another couple of quarters to cement that view that there is a recovery in microfinance. So I think at the lower end of the consumption, we think that there could be more trouble yet, which is where we are a little bit more cautious. The other thing that we also have to understand the valuations, right? So some of the paint companies, cement companies, still are expensive despite underperformance. I feel that the growth is going to be single digits, and the valuations are north of 40. So I feel that valuation contraction is possible, and these are the sectors that we think is completely avoidable at this point of time.
Okay, Jitendra, thank you so much. We'll let you go on that note. Thanks for coming in and speaking to us.
Thank you.
All right. Kunal, your calls at this hour, at this point, something that's standing out maybe for a BT